Nigeria is home to approximately 40 million MSMEs, micro, small, medium enterprises, of which 90% are in the informal sector. The data on challenges they face in accessing loans and aversion to saving with traditional banks is compiled in a new report from Nigerian fintech company Money Point. That's the cover of the report right there, the 2024 Informal Economy Report. Now, let's look at access to loans and how MSMEs save. A couple data points from the report. I think starting with access to loans. So yeah, it's the bank of mom and dad and friends and family and stuff. 70% for these MSMEs are going to family and friends for capital. They're using loan apps, which have really high interest rates, 15% of them, and just 12.2 for traditional banks. As far as how they save, because we're going to be talking about savings and investments with our guest from FBNQUEST in just a second. Method of saving, cooperatives and group pooling of funds, 47.5%. Digital banks, 39.5%. Traditional banks, just 11%. Others, 2.3%. All right, moving to equities. The equities market in Nigeria. Could we see a pullback in the second half of 2024. Here's what was said at the Arthur Stephen Asset Management Limited, that's ASAM, quarterly webinar, which was titled The Economy and Capital Market Outlook for Second Half 2024. Professor Fisayo-Kolawole, you recognize him. He's a frequent guest on the Arise News channel. He's the president of the Association of Capital Market Academics of Nigeria. He said, I see a stock market that will likely pull back in H2 2024. That's the second half of the year, having attained a peak in Q1 2024. If history is any guide, market correction will most likely occur. All right, so let's tackle these topics with Laura Fisayo-Kolawole, Head of Equities and Alternative Asset Solutions at FBNQUEST. Laura, you're very welcome. Thank you very much for joining us. Good morning to you.
Nice to be here.
So what do you think? You think we might see a pullback in the second half of the year on the NGX?
I mean, I think for me, I will disagree slightly with the Professor. I think that there are conversations that, to my mind, would allow for something of a tailwind. Yeah. I think a particular thing that we can all look at is the banking recapitalization, right? I think whether you love the banks or hate the banks, that activity just generates interest in equity markets. And I think it will have people asking those questions. So, what are the names that haven't moved this year? Is there value in consumer goods? Is there value in agriculture? Is there value even in the banking sector as well? And I think that will allow people to start looking at the equity market and perhaps start cherry picking as we rebalance for the second half of the year. To be fair, the rally that we had in Q1, 39% move on the ASI, it pulled back in Q2. I think we had a pullback in Q2 of about 4%. I think that was fair and expected. Right. When you look at how Nigerian markets have also performed versus other African markets that we cover, so I think South Africa is about 4.5%, Egypt's at 15%, I think Ghana's at 26, 29% year to date. Kenya is around 15%. So Nigeria, at even current 33%, is still one of the better performing markets in Africa. And we think that that will carry on to the end of the year. So we'll probably end the year as one of the better performing markets in Africa. And I think the banking recap is probably a good tailwind to regenerate interest in Nigerian equities going forward.
Professor Walake did mention monetary policy as a headwind. How do you see it? You think, I guess, depending on whether or not they keep hiking rates, could that impact the stock market?
Yeah. I mean, I agree. And I think if I was thinking about things that would be a headwind for the market, that would probably be the one thing I'd think about. A few things, when you look at even financial markets today on the fixed income side, liquidity is about minus 1.4 trillion. So there's certainly upward pressure on yields currently. When you then add that to the fact that inflation is where it is, 33%, almost 34%, and you know that the CBN is concerned about keeping inflation expectations in check, you know that the CBN is also focused on ensuring that we all don't end up expecting, price rises to go up. So there's certainly that expectation that they would probably start thinking about raising rates again to try to curb inflation. There's also the fact that the supplementary budget is to be funded. Again, that's likely to mean debt raises, putting pressure on yield. So I can see how that's a clear, I'd say, headwind. However, for me, when I think about the pace of change of interest rates, which I think is probably the bigger driver of where markets will go rather than the actual level of the interest rate, we've had 750 basis points this year. we can't do that again in the second half of the year. I think we've really reached that terminal level.
Right.
When you look across the African continent, I think the only country that's hiked more than Nigeria is Egypt at 800 basis points. I think this year even Ghana's cut rates by 100 basis points. Kenya's only done 50 bips. So we've really gone quite far in this H1 raising rates. I don't know that that pace of change will remain. And so I think, especially if the Fed starts cutting rates and other developed markets start cutting rates this year, that interest rate differential is probably more of a headwind to our markets than perhaps a tailwind.
All right. You've mentioned...
tailwind rather than headwind, I would say.
You've mentioned inflation. When you think about a sector like consumer goods and breweries and all that, what about inflation as a headwind? Is that... so there's the trajectory there. I mean, it's just been flying.
Yeah,
That's year on year, though. That's year on year.
Year on year. And I think a large part of that year on year is the fact that we had the subsidy removal in May of last year.
Right.
So that effect really was a big part of the jump when you see from May, June, July, and so on.
Right.
That drops out going forward.
Okay.
So that base effect is probably a key thing that, again, would mean that the pace of change of inflation should begin to decelerate, I would think, going forward from now, because that subsidy removal, that big jump that we saw in fuel prices probably falls out. I've also heard the CBN governor talk about the impact of refining.
Yeah.
When we start seeing that refined crude coming to the market, that increased supply should also help the price environment in the market. And so to his mind as well, that's also something that would mean that inflation going forward should not increase at the same pace. And that's, I think, what may give the CBN confidence to believe that these are really terminal interest rates. And so we don't need to see the same sort of hiking cycle that we've had in the past.
Well, you mentioned crude refining. Just watch out for those thunderstorms, huh? Those thunderstorms. They
stop the transfer from mother to daughter vessels.
So you gotta watch out for that.
You gotta watch them,
Let's see. What sectors do you like on the NGX? What sectors are you looking at?
So I think sectors. I mean, obviously, when you hear the markets move 33%, you sort of think, is there value anywhere?
Yeah.
And you try to look for those places where we haven't seen moves as far, or where there's a fundamental driver. So one of the things that we like, for example, is agriculture.
Oh, okay.
We think, for one thing, as a country, food security, tackling food demand, given our population, I think that's a no-brainer in terms of places we need to try to encourage activity. And so sort of when you look at the palm oil names, in particular names like Okomo, that are really food producers who are out there growing, selling into the market, helping us with our food security, we think that there's actually a lot of value there, especially because when you think of where global commodity prices are, there's an expectation that going into the second half of the year, we would see some oil shortages on the food oil side that should also support prices there, and that should help the likes of Okomo and Presco. From when we look at where government spending is focused on, I think everybody can agree that government spending is focused on infrastructure.
Right.
And you hear about the coastal road being built, things like that. And so one of the things that we would also expect is our infra-focused type names on the cement side, for example, there should be value there.
Yeah.
Now, some of the big names in those sectors have moved quite a bit this year. When you look at, I think Bua Cement is trading at a P of like 79 times. I think Dangsem is like 24, 25 times. And so a name that we think should still benefit but hasn't yet picked up as materially as its peers is perhaps WAPCO.
Okay.
And so, we think that where, cement volumes should drive there, the business is also on a cost-cutting drive that should also help margins going forward. And so, that's a name that we would probably say there is a strong top-line story for it, and that should also pick up alongside peers like Dangsem and Bua that haven't moved so much this year.
Now, we put up a little chart. I want to ask you about alternative assets.
Yeah.
Right. So I don't know. We put up precious metals, so gold, cryptocurrency. Yeah. So there we go. So what do you think of this list? Real estate, arts, precious metals, watches. Okay. You mentioned agriculture, you've already put that in there, and crypto. What do you think? Is that a little wild? What were you thinking of as far as alternative asset options?
Do you know what? So I look at the list, right? I think agric real estate. I think it's also worth adding infrastructure in the context of where we are as a country. I think those are markets that directly benefit Nigeria, and I think that in Nigeria we would see performance just based on where the Renewed Hope agenda is trying to generate interest, generate activity. I think that those are, so real estate, agriculture, infrastructure are probably three areas that as a country there is a lot of government focus in driving activity. And so when you look at the companies that are coming out trying to raise financing, a lot of them are actually in these sectors. So when you look at the sort of CPs that are coming out from the corporate side, the corporate bonds that are coming out, they're all talking about funding, whether it's real estate, agriculture, or it's infrastructure. And I think that those are really the drivers of growth going forward. I would love to, I don't know much about the art market or the...
Or watches.
Watches.
We should have added exotic cars.
Yes. Do you know what? I would love to sort of be a dealer in Rolex or Patek Philippe and sort of tell you about what's happening there, but I wish I could. Maybe, in a few years.
We'll bring you back for that. I do quickly want to get your thoughts on this Money Points report. Just two data points on the access to capital for MSMEs. I think it said, 75% is family and friends that access. What do you make of that data point in terms of, it looks like we're forever talking about access to capital for MSMEs.
I think it's not surprising. So the first thing is I would imagine that the cost of financing from family and friends is significantly lower than from traditional banks or loan apps. So I would imagine that that's why it's like the number one, I would also think that even if you think about, especially if you look at why banks are so low, I would say the processes.
Right.
A lot of these people are not in the formal sector. They probably don't have collateral. And when you go to a bank, you want to take a loan as a business, for example, you would need to put up some kind of collateral or have some kind of credit history. Many of them probably spend a lot of their money on day-to-day expenses. There's really no business saving. And so I can see why it is difficult to go to the bank of financing, and it's easier to go to family and friends because, again, I can imagine that, if you think of where interest rates are today, a bank would probably lend to an MSME if it wanted to, maybe at almost 40%. I would imagine. I don't know, but I would imagine. Family and friends probably would just say, "Oh, take the money, okay, pay me back over this time." There's probably almost no interest rate, maybe very, it's such an unstructured sector that it's easier for them to go to family and friends. It's harder to access banks, even the touch points to meet the banks, are the banks there? Do they have agents in those areas to even provide that initial contact for, to allow people evaluate whether the bank's loan is cheaper than family and friends or even a loan app? Because with the way phones have exploded, you can download a loan app and you can get loans in that. I see adverts in 10 minutes and 15 minutes.
Right.
Can you access a bank in the same way? Probably not.
Gotcha.
You have to first, you have to open an account, you have to go through all of that drama, which is often a physical activity, like you have to actually go to the bank. So I think those are really the issues why the banks are so low.
Real quick, we're running out of time. What's your outlook for the second half of the year? Just generally speaking, the economy, how do you see things turning out? So
I think on the one hand, one of the things that we would all love to see is more foreign inflows coming into the country. And I think that if we're able to tackle that, that will be a great tailwind for the economy. From a growth perspective, I've talked about the fact that sectors that we're focused on, likes of infrastructure, agriculture, these are areas that should drive sustainable growth in the economy. Not a lot of growth coming from the oil side of things, to be honest. So we're seeing about 3.5, 3.6% growth for the country this year, primarily driven by the non-oil sector, primarily driven by sectors that I've talked about, finance, infrastructure, construction, trying to really galvanize economic activity and hopefully get those foreign inflows, which is a key thing that we need for currency stability.
Laura Fisayo-Kolawole, head of Equities and Alternative Asset Solutions at FBNQUEST. Always a pleasure having you on the show. Thanks for joining.
Wonderful to be here.
Really appreciate your time.